My name is Mike Sullivan. I'm a former IRS agent, and welcome to my short, quick, and sweet YouTube channels. I've worked thousands of cases for Internal Revenue Service, so pretty much whatever you hear from me is just not some things people learn. It's something that I was actually a part of and worked for Internal Revenue Service. There's a huge difference, by the way, in having former IRS agents work your case and other people. We know the system. We were trained in the system. We know the IRS thinking. We know their personal ways they're going to go ahead and work your case, your individual case. So today I want to talk to you about how do you get your case into hardship, or what's called currently non-collectible. You know, a lot of people just cannot pay their tax debt. They didn't have enough withholding coming out, or they didn't make estimate tax payment, and really there's just a lot of bills out there, and you know, you need to live. You really do. You know, you can't sometimes afford to pay taxes. So really, what do? Well, IRS has a program called Hardship, or currently non-collectible. Believe it or not, 40% of all open inventory cases with IRS are put into that currently non-collectible or hardship case. IRS has to have a way, they're not going to take your word for it, of determining who goes in hardship and who does not go in hardship. So what they do is they basically use two forms: an IRS form 433A, 433B, or 433F. The A is used by the revenue officer, the F is used by the service center, the 433B is the business financial statement. IRS wants to see that financial statement documented. They want to see bank statements, pay stubs, wages, income, and expenses. You need to verify everything that is really on that form for IRS. IRS will then look at that body of work, that financial statement you gave them with the documentation. They'll look at your tax returns, your cost of living, look at that financial statement and say, okay, that kind of makes sense. So IRS uses what's called a national standard of worth of expenses. It's very important you understand this if you really want to go into hardship. So IRS National Standard Program, they use certain standards in the area that you live in geographically. The Department of Labor sets these standards up for every county in the United States. So IRS is going to give you a fixed figure for housing and utilities. They're going to give you a fixed expense for food and clothing, and a fixed expense for car payment and gas. Everything else kind of IRS is going to accept as long as it's reasonable. But if you want to get your case in currently non-collectible, you're going to have to call IRS, or bigger cases, you really need to talk to a tax professional. Because if IRS is saying, oh, we're not going to do this, we're not going to do that, you're not going to know the difference. Only the professional can really fight. As an agent, I used to love when people weren't represented. But anyway, at the end of the day, once you understand the financial statement and the National Standards Program, your case easily can be put in hardship. But remember, IRS is going to want all documentation you have before they put you there. You're welcome to call me, ask me questions. If you have a question you want to ask, hit me back, and I will feature your question on my YouTube channel. Thank you for listening. Me and my M&M mans give you a thumbs up.